Hello, fellow traders. 'Tis I, the Rumpled One. It's Wednesday, April the 10th, the year 2019. Let's talk trading. Horizontal lines, rat zone. Of course, before we can talk about anything, we have to remember about our money and risk management. Hopefully, if you've been watching my videos for a couple of months, this has pretty much been seared into your brain. You would never, ever enter a trade without considering and employing your money and risk management. Okay, quickly for the week, gaps all filled. You can see that the euro yen has penetrated the weekly midpoint and then come right back to it. So for those of you who like to play the midpoint crossovers, previous day, previous week, previous month, once again, there's a Larry live trade right there. Okay, so getting into the meat of today, it's the rat zone. You can see we put in a high, nice daily high here, nice daily low here, nice separation between the zones, 66 pip range, and you can see here rat reversals. And here's a nice one right here that proved to be profitable. Here's one here, good for a few pips. And it looks like you might get another opportunity to trade a rat zone trade on the euro yen. Now take a look at something here. Okay, looks like we had a couple of closes just above the 125.00 mark, but price has been rejected from that area more than once. You can see here lower highs being put in. Even this one's higher than this one, it's still lower than that one. So lower, lower, lower. So for those of you just tuning in, what is the rat zone? The rat zone is from the current daily low plus 20 pips. Any trade in here you should be able by the end of the day to make a profit. Now, you don't have to wait till this point to go long. No, you can go long down here, just like up here, you could go short. I mean, right here, there was a reversal. You see it put in a new high, came back down. But this is the last point that you can enter short to get in on a rat zone short. And here's the last one you could get in on a long. Now, one thing though, from this point, let's see. Why isn't it? That's weird. How come? Oh, I'm using the wrong key. Okay, let's just look at something here. From this point, why isn't this cooperating? Something's going on here. I can't seem to get the cursor to act right. Anyway, the point I'm trying to make, between here and here, let's see, we'll just have to do it this way. Oh, that was about 41 pips. So the zones would have been right on top of you. So taking this trade live really wouldn't have necessarily been a trade that you would want to enter, because there was only about 41 pips between here and here. But you see right now between here and here being 60, you get the action, you get the bounce, and you can take the profit. So once again, I like to see about 60 pip minimum before I will enter it, unless there's something else going on in the rat zone. Maybe there's a candle top, previous day's candle top, bottom, high or low in here that I'd be taking a crossover trade or a wick zone trade off of, or a weekly open, anything like that. If it's down here inside the zone, that just gives me another reason to take that trade. And looking at the daily, you can see here price pushed up, came back down through that bottom wick and just shot right out. 67 pips. I don't know what's going on this week. Maybe the week after NFP, not too much action. Only 4 pairs over 100 pip in range. And look at the dollar yen, dollar franc, only 43 pips, dollar Canadian, only 53 pips in range. And you can see here off the dashboard, anything that's in magenta in the high minus close or close minus low indicate prices in the rat zone. So you can see here, let's switch over to the pound dollar. You can see it's in the upper rat zone. And if we go back, you can see right here, and there is a Larry live trade right there, a short. 84 pip range, looking to see if that price will make the drop. So let's go back to euro yen. And since I just switched chart like that, the tick chart erased. Ditto for the Einstein line. Now, just going over once again, just looking at a daily chart, blank daily chart, you can see these large wicks. So in other words, price moved up, pushed back down, price moved down, pushed back up. Here, indicator showing if we have rat zone trades. And you can see here using just the HL5 indicator, you can set up rat zone, or you can use the rat zone indicator, either one. Some people think the other one's too busy. And looking at the range for the day, 67, only 84 for the week. Not much going on here. And if you're wondering about these are just the ATRs from the open, where these lines are 50% of the ATR, and from the low and the high. And then we also have the weekly ATRs, and as you can see, just not much range happening at all. But the main thing is on the rat zone is that we get those nice moves. Now, I've shown you this chart this week, but let me show you another feature here of the frequency distribution. We can use a day filter when we can use a green filter. So do we want to use the daily filter here? If we say true, and this one is high minus top. So in other words, if the candle's going up, okay, so we got the daily filter green, and you can see here, so only looking at the ones that hit the top here and then came back, because we assume if it's a green candle, it hit the top last and pulled back. You can see difference minus 10, 85, difference minus 20, 56. So for bottom low, what we can do here is we can say use daily filter true, use daily green false, so that means it's red. And so daily filter red, so off the bottom, bigger than 10, 75, bigger than 20, 54. So that means, once again, you don't have to wait till the edge, to that 20 pip move. You don't have to wait for this to get in. You could get in here. So what these frequency distributions are telling you, if you get within 10 pips, chances of it being bigger than 10 here, bottom minus low is 75%, and high minus top is 85% based on statistics. So that way, you see, there's a chance it's going to be a winning trade, because this is telling you that price doesn't like to close within the rat zone. And this is over the last 1,000 bars, so that's a really good test. And here, once again, looking at the range, you can see here that, 60 to 69, it's going to be bigger than 60, at least about 9 out of 10 times. That is why I like to see a range greater than 60 before I enter a trade, because otherwise there's a chance it can go against me if I'm trading a reversal. And that's another reason why I like to look at the ATRs, the average true range, to see. So you can see here, think about it. The average true range here, 514. I do my ATR lines indicator, and what that does is it runs a loop between ATR2 and ATR14, and it sees what was the biggest, what was the smallest, and then it plots accordingly. Okay, so 5 was the minimum, 14 was the max. So we take the daily open, okay, and we can see here it came up and passed over the open plus half the ATR. Okay, and here's the daily open. It came down and passed over half the ATR. So what this is telling me is it's gone into that ATR range between here and here. I hope that's clear, because in other words, it's saying, hey, it's ranged out. So it's possible it could go more, but it's a safe bet that you can now trade the reversal. Safe bet meaning you've got statistics on your side. So what you want to do then is, of course, employ your stop loss, but this should give you the confidence to enter the trade. So here we're using H1. You see here, we put in a lower low, higher low, bouncing off that. Candle turned green. This is also lowest, highest, open, lowest, open, a holo trade right here. Past that ATR, and you see what happened. So this is how you employ all the tools available. And once again, horizontal lines. So right here, the lowest open would be a horizontal line. The rat zone is going to be a horizontal line. Okay. So see here, we're right at the edge. So here's the low. You do a rat reversal trade or a turn trade right here. Bear, bull, breaks the top. There's a trigger. Still within the rat zone. So once again, the rat zone is one trade, and it's actually an area saying if you place a trade in that area, chances are price is going to leave that area heading back towards the open. So it's not complicated. Now, for those of you wondering about the ATR, once again, it's in the TRO Build 1000 or the Motherlode's ATR line. Scott, I don't even remember how long ago does this even, what is it, back in 2010. So that indicator is almost 20 years old, but it still works and it's still valid. So I hope that gives you a little more information on the rat zone and how it works as a statistical trade and how you can use it to make profit. And if you have any questions, feel free to post them. But as always, remember, it's not what you trade, it's how you trade it. So get out there and drain the banks like a rat.